Imagine turning a measly $100 into a staggering $1.5 million. Sounds like a fairy tale, right? Yet, this is the reality for early cryptocurrency investors. In the span of just over a decade, cryptocurrencies have exploded onto the scene, shifting the financial landscape and creating a new breed of millionaires. Bitcoin, the pioneer of this digital revolution, started as an obscure idea in a white paper published by the enigmatic Satoshi Nakamoto. From its humble beginnings, it has grown into a global phenomenon, with a market cap that has reached into the trillions. This unprecedented growth has been fueled by a combination of factors. The first is the innovative technology behind cryptocurrencies. Blockchain, a decentralized ledger system, provides a level of transparency, security, and efficiency that traditional banking systems can't match. This has made cryptocurrencies an attractive alternative for many, driving up their value. Second, cryptocurrencies are increasingly being recognized as legitimate forms of payment. Major companies from Microsoft to Tesla have started accepting Bitcoin as a payment method, further bolstering its credibility and value. Third, the limited supply of cryptocurrencies, especially Bitcoin, has created a sense of scarcity, pushing prices even higher. With only 21 million Bitcoins ever to be mined, demand continues to outpace supply. But perhaps the most compelling factor driving the growth of cryptocurrencies is the potential for future expansion. As more people and businesses embrace this digital currency, its value is expected to continue to rise. Of course, it's important to remember that with high reward comes high risk. Cryptocurrencies are notoriously volatile, and while some have become overnight millionaires, others have lost substantial amounts. Investing in cryptocurrencies requires careful consideration and a robust risk management strategy. It's clear that cryptocurrencies, especially Bitcoin, have transformed the financial landscape. Now let's delve into some success stories. Cryptocurrencies are not just about numbers and charts. They are about real people who have seen their lives change. Let's dive into some real-life success stories that have come from investing in cryptocurrencies. Take Eric Finman, for instance. Aged just 12, he received $1,000 from his grandmother. Instead of spending it on video games or toys, he bought Bitcoin, which was worth about $12 a coin at that time. Fast forward a few years and he became a millionaire before he was even legally allowed to vote. Today, Eric is a renowned entrepreneur and a firm believer in the power of cryptocurrency. Or consider the story of a couple from San Francisco who, in the early days of Ethereum, decided to invest a significant portion of their savings. They believed in the potential of blockchain technology and the vision of Ethereum's creators. Their gamble paid off, and their initial investment ballooned into a fortune, allowing them to retire early and live a life of financial freedom. But it's not just about striking it rich. Cryptocurrencies have also helped individuals in economically unstable countries. Take the story of Carlos from Venezuela, who turned to Bitcoin during the economic crisis in his country. Carlos used Bitcoin to preserve his wealth and escape hyperinflation. He now runs a successful online business, all thanks to his decision to embrace cryptocurrency. And lastly, let's talk about Christopher Koch from Norway. Back in 2009, he spent $27 on 5,000 Bitcoins for his research thesis. Fast forward 4 years, he remembered his investment when he read an article about the rise of Bitcoin. To his surprise, his $27 investment was now worth almost $1 million. These stories are inspiring, aren't they? But how does one get started with cryptocurrencies? Cryptocurrency investment may seem daunting, but it's actually straightforward once you understand the basics. So, let's dive in. Cryptocurrencies are digital or virtual currencies that use cryptography for security. They are built on technology called blockchain, which is a decentralized system spread across many computers that manages and records transactions. This technology not only makes the transactions secure but also transparent and free from control by any central authority. Now you might be wondering, what are these used for? Well, cryptocurrencies can be used for a variety of things. They can be used for regular purchases, just like your typical currency, but online. Some people also hold them as an investment, hoping that the value goes up. Others use them for more technical purposes, such as powering applications on the Ethereum network. Speaking of Ethereum, it's time to talk about the big players in the crypto world. Of course, Bitcoin is the most well-known, being the first and largest cryptocurrency. It was invented in 2008 by an unknown person or group of people using the name Satoshi Nakamoto. Since then, it has led the way for all other cryptocurrencies. Ethereum, on the other hand, is more than just a currency. It's a platform that allows developers to build and operate decentralized applications. Its currency, Ether, powers these applications. There are also others like Ripple, Litecoin, and Cardano, each with their unique features and uses. For instance, Ripple is often used by banks and other financial institutions to make international transactions faster and cheaper. Now, before you dive headfirst into investing, remember that while cryptocurrencies have the potential for high returns, they are also highly volatile. This means they can rapidly increase or decrease in value, which can lead to significant gains or losses. So do your research, understand what you're investing in, and don't invest more than you can afford to lose. Cryptocurrency isn't a get-rich-quick scheme, it's a new kind of financial system. Now that you have a basic understanding of cryptocurrencies, let's discuss how to get your hands on them. Buying cryptocurrencies is as easy as shopping online, thanks to cryptocurrency exchanges. These exchanges function as digital marketplaces where you can buy, sell, and trade cryptocurrencies, just like commodities on the stock market. They are the bridges that connect the world of traditional finance with the innovative world of cryptocurrencies. The first step to buying cryptocurrencies is choosing a reputable exchange. This is crucial because the exchange you pick will be responsible for the security of your funds. Do your due diligence, check the exchange's security measures, customer reviews, and its history of handling security breaches, if any. Remember, it's not just about the numbers, it's about trust. Once you've chosen your exchange, the next step is to set up an account. This usually involves providing some personal information and going through a verification process. It's a little like opening a new bank account, but in the digital world. With your account set up, you're ready to make a purchase. This process varies a little from exchange to exchange, but generally, you'll deposit fiat currency. That's your everyday money like dollars, euros, pounds into your exchange account. Then you can use that to buy your chosen cryptocurrency. However, it's not all about buying and holding. Cryptocurrencies can be traded much like stocks. You can buy when prices are low and sell when prices are high. Or you can trade between different cryptocurrencies, leveraging their price differences. This is called arbitrage, and it's a common trading strategy in the crypto world. But remember, any form of trading involves risks. Cryptocurrencies are highly volatile, and prices can swing wildly in short spans of time. So it's important to only invest money you can afford to lose and always do your own research before making any decisions. Once you've bought cryptocurrencies, the next step is to securely store them. Because just like gold or cash, cryptocurrencies are valuable assets and need to be kept safe, but we'll get into that in the next scene. Just like your hard-earned cash, your cryptocurrencies need to be securely stored. We've talked about what cryptocurrencies are, how they've grown, and how to buy them, but once you've got them, where do you keep them? The answer is in a cryptocurrency wallet. A cryptocurrency wallet is a digital wallet where you can store, send, and receive cryptocurrencies. There are several types of wallets, each with its own advantages and disadvantages. The first type is a hot wallet. It's a wallet that's connected to the internet, similar to an online bank account. Hot wallets are user-friendly and readily accessible, making them perfect for everyday transactions. But just like anything on the internet, they're vulnerable to hacking. That's why it's crucial to use reputable wallets with robust security measures. Then, there's the cold wallet. It's a wallet that's not connected to the internet, similar to a safe in your home. Cold wallets offer the highest level of security, making them ideal for storing large amounts of cryptocurrencies. But remember, they're less convenient for regular transactions. Now let's talk about security. Security in cryptocurrency investments is paramount. One of the key aspects of this is protecting your private keys. These keys are essentially the password to your cryptocurrency wallet. If someone else gets hold of them, they can access your cryptocurrencies. So, always store your private keys in a secure location. Another effective security measure is two-factor authentication, or 2FA. It adds an extra layer of security by requiring not only a password and username, but also something that only the user has on them, like a piece of information only they should know or have. With these tools in your arsenal, you are now ready to embark on your cryptocurrency investment journey. Remember, the world of cryptocurrencies is full of opportunities, but it's also volatile. Invest wisely and always do your research.